Well, hey, Southern Oregon, welcome back to the Real Estate Show. So glad you could join us again this weekend. We've got market updates and we've got Guy Giles from Mutual Mortgage, one of our sponsors, coming on the show today. And Guy is bringing with him Mr. Jason Reno of People's Bank. This is going to be particularly exciting because Jason Reno is the commercial lending team lead for People's Bank, and we're going to get to hear all about the different kinds of commercial loans, how they help our community, how they can help small businesses, and also some of the trends happening in the commercial market. There's a lot of misinformation about the commercial lending right now. And also we want to dive down into what it means to Southern Oregon for us locally. So Jason Reno of People's Bank and Guy Giles Mutual Mortgage will be joining us here shortly. In the meantime, while we're waiting for them to come into the studio, let's check briefly on our 3 counties local housing statistics because we're still trying to stabilize. I don't have all 3 counties lining up yet, but we do have some bits and pieces of good news and then a few bits and pieces of not so good news. So let's start this week with Klamath County. Year over year prices, residential market are up 16% this week. The average single family home in Klamath County costing $327,786. The number of solds this week, year over year in Klamath County were up 27%. There were 14 closings in Klamath County in the residential market on SOMLS this week. The number of listings in Klamath County were about the same. Year over year, we've got 224 active residential listings on SOMLS this week. Josephine County prices year over year were down 4% this week in the residential market. Average single family home in Josephine County this week costing $424,978. The number of solds year over year in Josephine County this week were down 15%. We had 16 closings on SOMLS this week in Josephine County residential markets. The number of listings were up 3% year over year in Josephine County. There are 266 active listings in the residential market on SOMLS this week, Josephine County. Now let's go to Jackson County. The prices were up year over year in Jackson County, 19%. Folks, the average single family home this week costing $546,788 in the residential market, Jackson County this week. The number of solds were down 12% in Jackson County. We had 41 sales this week on SOMLS in the residential market. The number of listings in Jackson County were only down 1% year over year this week, 579 active listings this week in the residential market on SOMLS. So folks, we still need listings. Buyers, we need you to hang in there. I know it's a little topsy-turvy out there, but we are getting some legs in the market, and we feel like it's going to be a good summer. Folks, if you've got houses to sell, please call your agent, get them on the market right away. And if you're thinking of buying, get pre-qualified. It will make it easier. Now let's get to our guest for this week. Well, hi, Jason and Guy. Thanks so much for being back in the studio today.
Absolutely. Thanks for having me.
So, Jason Reno, commercial lending team lead at People's Bank, and Guy Giles Mutual Mortgage, just to remind
residential. And yeah, we kind of team up sometimes because he's really good at the commercial side. And anyway, we just kind of became friends a little bit and doing some business together. So I thought I'd bring him in and talk about commercial.
Cool. So Jason, let's why don't you tell us about what you do and who you are in People's Bank?
Yeah, absolutely. So Jason Reno, commercial lending team lead for People's Bank. I've been there for 13 years now. And at the bank, I have the pleasure of managing our commercial lending team in Jackson, Josephine, and Klamath counties.
Oh, you do all 3 counties?
I do all 3 counties.
That's great.
Yep. So a lot of fun. Commercial lending is certainly a different beast, but I think it's something that I enjoy for the same reasons that you guys enjoy. Residential is very creative, very dynamic, and you can a lot of different ways to get things accomplished. So, yeah.
So, I think because commercial is a completely different beast, there's also different kinds of commercial. Can we talk a little bit about that so our listeners know?
Absolutely. Yeah. So commercial lending, you know, broadly, there's commercial real estate, and commercial real estate can be anything from a retail strip. It can be a multifamily residential project. It can be a warehouse. It can be a church. It can be a bowling alley. So it can really be anything. And then there's what we call CNI, which is equipment lending, and then lines of credit. And lines of credit can be used for supporting cash flow of a company. And then there's also construction lending. And construction lending, again, that falls under commercial real estate, but we can do construction lending for any of those that I mentioned before, from multifamily to owner-occupied warehouse, whatever it may be.
Wow,
Very broad.
that is very broad.
That's cool. Have you seen any kind of a shift at all as far as when COVID started? From like we used to do this all the time, and now COVID hit, and now you guys are just seeing a shift to something different.
So, when COVID hit, there was a ton of new construction. And that, I think that coincides with a couple things. There was a lot of money that was put into the economy through some of the efforts that yeah,
The
a lot
government,
of money. The
the
government put
government.
a lot of money into the economy, and then interest rates were extremely low. And so the
Mhm.
combination of those two things brought about a lot of construction, and that construction was multifamily, so apartment buildings, especially with the housing need that we all know that we have in Jackson County. But then also business owners, they had cash from PPP and from other things. Interest rates were low, and so it made building their dream building, whatever that may be, more achievable. So when COVID hit, we saw a pretty significant increase in activity, and that's tapered off a little bit, obviously, with the change of interest rates. Um, but that's what we saw.
Wow. So the people that are doing okay and making it right now with these higher rates, because I guess they were getting in there on the some of the lower ones, maybe some of those adjusted to something else. How are people dealing with that? Have you guys got any?
Yeah. So with the change of interest rates, certainly it's slowed things down. Um, a lot of what we do is investor properties. So people just purchasing investment properties that's either multifamily or even single family homes. The way we go about underwriting that, though, is based off of the cash flow of the property. And so when your cost to borrow increases, you have to have more cash flow to support that. So that has slowed things down a little bit. And then the other thing that we've come across, and we're starting to see that now, is, as you had mentioned, rates adjusting. Many commercial mortgages are adjustable rate. So they may be a 3, 5, 7, or 10-year adjusting rate. And we're starting to see those adjustments come to fruition.
So that's what they're talking about on the news then.
Correct. Yep.
Okay.
Yep. So when we hear about commercial kind of being the next big thing, I think that that's making reference to this upcoming change in interest rates, because a lot of this credit was booked at an interest rate of maybe 4%, let's say, and now we're going to be more around the 7 to 8%. And so that's a pretty significant impact on a business's cash flow, the money they have to put out for debt service. But then for investors as well, rents may not necessarily keep up with that. And so it can put a strain on cash flow there too. It can also make qualifying more difficult when you're looking at investment properties.
For sure,
Yeah.
sure. So, are the qualifying criteria different for commercial than residential?
Than residential? Yes. And so when it comes to commercial, the qualifying criteria are going to be based off of what we're looking to finance. So owner occupied, we're going to be looking at the business's cash flow to qualify. But if it's an investment property, we're going to be looking at the cash flow of our property that we're acquiring. We want to make sure that rents minus expenses, there's enough there to service our mortgage. Whereas with owner-occupied property, we'll just take a look at the business's cash flow and see if they have enough. So it's less about the property itself and more about that business's cash flow.
Wow, that's really interesting.
We on the residential side, we're allowed to do up to 4 units. So these guys kind of take care of anything bigger than that, and we do them. If you can get a regular traditional loan that's 30-year, it's good if you're 4 units or under. But if you're over that, then the commercial guys. But we've kind of made a move to what they're doing, where we'll have bank statement loans and cash flow loans on the smaller amounts. Like I said, you always want to call him and Peoples when it comes to the bigger stuff. But that said, we've actually made a move to where we're able to originate some of these ones that if the place, if you've kind of fell apart, the place still pays for itself. We're allowed to loan on those now too.
Oh, that's super cool.
Yeah.
So a little bit of crossover. So, Guy, how are things going this week with the residential and the Federal Reserve? We just have about a minute before the next break, but
Well, they're looking now towards like second quarter as far as them lowering their rates. Like I said, I always tell everybody that, we're not directly tied to the Fed rate, but that said, it's all inflation. So as they lower that down, we should see our, rates coming down about the same time, trading on our mortgage-backed securities. So we're thinking second quarter at this point.
okay. How dependable is that?
Not as dependable as me telling you it was first quarter last year.
Well, and it's not us. It's not
No,
us. And we're not picking on Chairman Powell.
Yeah, we
but...
can't hardly blame. I'm going to shut up. I can't go political. But anyway, I don't know who's running the ship, so it's hard to know.
Yeah, a lot of volatility. So we're talking to Jason Reno from People's Bank. He's the commercial lending team lead, and Guy Giles today for his monthly update with Mutual Mortgage. We're going to have to take a quick break. We want to say thank you to John L. Scott, Ashland, Medford, Guy Giles Mutual Mortgage, and our local Rogue Valley Association of Realtors. We're going to be right back. Don't touch that dial. Well, hey, Southern Oregon, welcome back to the Real Estate Show. So glad you could join us today. We're talking to Jason Reno of People's Bank and Guy Giles of Mutual Mortgage. Just a quick reminder, this episode will replay tomorrow at 8 a.m. on Sunday on the same station, the ACE Radio AM 1300. So, gentlemen, we were just having a great conversation about what commercial property loans are and some of the different types, because there's a lot of variation, isn't there?
Absolutely. Yeah.
Probably a distinction between when you should maybe look at a residential and when you should look at more of a commercial loan, which would be a lot of the time. So you can probably speak
and you
to that.
mentioned multifamily, and that's a really interesting slice of real estate, but also since our new Oregon laws, well, they're not so new anymore. What are they, 5-6 years old? But where you can have all these other units. Let's talk a little bit about multifamily and where the commercial comes in.
Yeah. So, multifamily, we define is over four units is kind of what takes it into
so that'd
commercial.
Be number 5.
That'd be number 5. Yep. So number 5 up. And so, the largest complex I think we've done is probably 45 or 50 units. So we can do some pretty large deals. But one thing I wanted to touch on is that, up to that 1 to 4, there's kind of a couple different options. And so although you could go commercial, oftentimes it makes more sense to go with Guy here because we're going to have a 30-year fixed rate mortgage, whereas our commercial loans are going to be an adjustable rate.
And that's what you were talking about before the break.
Yeah. So usually you can get a little bit of a better rate because those are sold on the secondary market. They're a Fannie Freddie product. And so you get that 30-year fixed rate, usually going to be a little lower than a commercial. Fees may be a little lower too. And oftentimes in secondary market world, they have some other tools available to them. Commercial mortgages, the bank holds them on their books. We hold them for the life of the loan, and we service them as well. And so, we always have to be prudent in doing our underwriting. And when we have Fannie and Freddie backed programs, oftentimes there's a little bit more latitude to get people into homes or to help investors too. And so that's where there's a really important distinction between commercial and Guy's products here, because I think that he could probably help out in some circumstances where we may not be able to in that 1 to 4 family area.
He knows that us residential people will do a little bit more loose lending sometimes. Not that we've ever been guilty of that in the past.
I wouldn't call it that. I'd say that it's having useful tools. We have a few different tools to
Yeah,
get people in homes.
when they allow Fannie and Freddie to do it, then we can,
Yep.
and then anyway. But I think there's probably some potential for you guys because I know there's a push to put a lot of people on top of each other in towns, and so there's probably going to be a lot more apartments, a lot more buildings that they're going to have more people in. So have you guys seen an increase in that at all?
Yeah, so certainly, especially with the housing need that we've had, there's been a move toward multifamily housing for a couple of reasons. One is it's also more cost effective, if you're building.
Yeah, because you're ordering 17, HVACs at a time. And
Yep.
just the scalability. So who's building these? Are they local builders or are they coming from out of town?
A little bit of both.
Really?
A little bit of both. We're having, I guess I'll say regional. We have one project that's going up right now that's going to be almost 400 units. And that is.
Where's that going to be?
So that is over by Northgate Shopping Center.
Oh, so we're watching those go up.
We're watching those go up.
So Representative Pam Marsh said those were modular.
Yeah,
So
actually,
are
that's
you guys-
another really cool thing
Are
that's
you guys
happening.
involved in that one?
So we're not. No.
Oh, I'm sorry.
No. Oh, it's okay. No, it's okay. No, but you touched on a really good point, and that is the modular, the prefab. So there's actually been a move to building walls and that type of thing in a kind of an enclosed, controlled environment because that adds efficiency as well, which really helps with making multifamily pencil out. So
Yeah,
that's been
with the
pretty cool.
higher costs of labor and supplies right now. So the Northgate project, 400 units.
To the best of my
I
recollection,
think
just
that's,
under.
that's
Yeah,
I think that's
just
what I
under.
heard too.
Yeah, but that's a
Wow.
gentleman that's
And that's a
is
local person.
not local but regional within Oregon.
Oh,
which is
within
nice.
Oregon.
Yeah,
Okay.
which is nice. And then we've had some from the single family home development perspective. We have some local people that are building single family homes that are what we'll consider to be not affordable housing, but certainly starter home price. In our world, if we can find something that's 500,000 or less, that seems to be
Right, I
moving a little
know.
bit more.
Can you believe
So
that's our starter
I
home
know.
now?
Big push to build units around that price. But then we also have like the D.R. Horton that's just come in, right, over by the Lone
Yeah, and for people
Pine.
who don't know, D.R. Horton is on the New York Stock Exchange.
Yeah.
They are a national level builder. I was shocked to see them here.
Yeah. Oh, yeah. I was shocked too. And they're building out in that, I think it's Lone Pine area is where
They've got a couple
they've
of
got a couple
spots.
going. Yeah. But then you have the Hayden Homes too. And then you have our local developers. So, we have Snyder Creek Development that's building out quite a lot over, I think that's off of Kings Highway.
Mm-hmm.
Yeah.
The Mahars are building
The
a lot.
Mahars are building too. Yeah.
Galpins are building again.
Yeah. So, it's nice to see that we actually have some housing inventory starting to pick up.
And is that something, because some of the builders probably listen to the show, is that something that would be a good fit for you guys if you had a builder that wanted to get a line of credit that, may want to
Absolutely.
finance? So
Yeah,
you guys would
that's
be good ones
that's
to
a
talk
good
to.
question. Like, how do you fund a subdivision?
Yeah, it's a great question. So we can fund both the development of the subdivision, so from the land acquisition to what we
So
call
you can help
underground.
do the initial purchase?
Yeah, so initial
Cool.
purchase of a piece of land, and then even if they go through the entitlement process, so they go through converting it from say EFU over to an MFR 20 or whatever it
Can
may
you
be.
do that? I thought Oregon, that was kind of a no-no to take farmland into.
Oh well, and I shouldn't say EFU. Yeah, bad example.
Everybody's going to get all
Bad
excited
example,
and sell
right?
their
Yeah,
farms.
no, I'm not an expert on this, so I'll take that back. But we can help with the acquisition. We can help with the horizontal construction, so actually getting lots, and then we can help with the vertical construction as well. So we do spec financing or pre-sold financing for builders. But yeah, we can finance from the acquisition of the lot all the way through selling the actual home.
No, that's super cool. So how much down payment do you need for a subdivision?
For a subdivision, so typically we're going to want probably 30 to 35% is going to be what we're wanting.
That would be a safe number.
Yeah, 30 to 35% down is what we're wanting to kind of get into development. Then, of course, it's tricky going through that entitlement process, that platting process, and so we need to have somebody that's got lots of experience to be sure that they can be successful in that transition to getting to those lots.
Yeah, a lot
Yeah.
of risk, but a lot of reward. Sorry.
No, I'm just thinking one of the nice things about maybe doing it like that is people that are, maybe getting a construction loan, like we have an all-in-one where you're qualifying and you don't have to requalify at the end, but
Yeah.
there are a lot of loans that you don't. And if they get in the middle and get caught in a rate hike thing, your builder might all of a sudden have somebody that's put a bunch of crazy chandeliers and upgrades into a house, but they could have a little bit more control if they're using your funds to build the place rather than individual construction loans. So I think there's a place for that.
Yeah.
Well, it's just great to have so many alternatives. And this is really interesting. I'd love to go back to multifamily only because it's really getting a lot of attention now. A lot of the multifamily in Southern Oregon is old or older.
Mm-hmm.
I mean, we're lucky to have some new units
stuff,
coming on,
yeah.
but how does People's Bank treat an older building and maybe deferred maintenance and stuff like that? How much does that matter when you're doing a commercial deal?
That's a good question. So it matters if you don't intend to do anything about it, right? So if you're, yeah.
Good answer.
Yeah. So if you, so one thing that I do believe sets us apart a little bit is I won't call it a rehab loan, but it's not uncommon for somebody to come in and say, hey, here's a piece of property that is undervalued because maybe rents are under market or there's some significant deferred maintenance and there's room for there's opportunity there to update the property and get it up to market rents. And so we've done it several times before. We'll make a loan. It's called a drawdown line of credit, but basically we will make a loan to acquire the property, and then there'll be a construction phase where we've got a builder that comes in that gives us a scope of work. We'll make those improvements to kind of bring it up to speed, and then we'll convert that loan to a fully amortizing mortgage. So it's something that we do often, and it's a great way to, take some properties that need some love and to do that. So, yeah, we're not opposed to them whatsoever. Yeah.
So in those rehabilitation situations on the commercial level, is there a time limit for the construction?
Good question. Not necessarily. I'd say that it really depends on what the builder tells us. If the builder tells us, hey, there's so much work here, it's going to be 12 months, or you have to give consideration, sometimes you need to have tenants. You need to remove tenants for the purpose of actually renovating those units. And so we want to be reasonable in our approach to that timeline. So it could be 12 months, it could be 18 months, just depending on what the builder says. Because during that construction period, it will be to help with cash flow, will help with interest only payments during that time.
Oh, that's good.
And so
that's super cool.
We'll go 12 to 18 months interest only. And then once we've got those units completed, hopefully we've got them leased up at market rents, then we'll convert that over to our term loan.
That's great. Jason Reno, People's Bank, he's the commercial lending team lead, and Guy Giles, Mutual Mortgage, here in the studio on the Real Estate Show. We'll be right back after a quick word from our sponsors, so don't go away. We're going to have more information. Well, hey, everybody. Welcome back to the Real Estate Show. We're having a really great conversation with Guy Giles from Mutual Mortgage and Jason Reno from People's Bank. And we're talking a lot about commercial today. And Jason, I wanted to loop back and talk about retail, commercial, because we were just talking a lot about multifamily.
Mm-hmm.
But let's talk a little bit about retail, warehouses, strip malls, stuff like that.
Yeah.
Or I guess actually hotels too.
Yeah.
Okay.
So we'll do hospitality as well.
Hospitality.
Yep.
There you go.
Yeah. So all of that fits into the purview of commercial lending. And, so our down payment on those is going to vary depending on the situation. But kind of as a rule, 25% down is what we'd be looking at. 20 to 25% down is what we'd be looking at. And then qualifying it really depends on the use of that property. So if we can consider it an owner-occupied warehouse, let's say, then it would be based off of the operating cash flow. If it's investor, then it'll be based off of the cash flow of the property. So kind of broadly speaking, regardless of the type of property that it is, that's how we kind of would approach it. If we have a unique property, so say you have a bowling alley that maybe only has a single purpose, then maybe we'll ask for a little bit more down. But
is that very common anymore?
For unique properties?
Single purpose.
Single purpose buildings? Yeah. I mean, we'll come across it every once in a while. I mean, churches as an example.
Oh, gotcha.
Yep. those quick 10-minute oil change places.
Uh-huh.
Yeah, maybe car wash tunnels, that type of thing. Yeah.
And what do you see kind of business-wise difference between the counties? Because we do report on the real estate show every week, all 3 counties.
Okay.
So yeah, how do you find them different in the commercial division?
It's a good question. I would say that the type of loan that we're doing is a little different. As an example, Klamath County has got potentially a little bit more agriculture.
And Klamath is growing, aren't they?
Klamath is, yeah, man. It's pretty exciting to see the growth over in Klamath. I mean, they have the air base over there, and then they also have the dam removal project, which has been a lot of money going into that. They also have Swan Lake. I can't remember the name of it exactly, but it's effectively they're going to be pumping water from one reservoir to another to create hydropower, which is very interesting. But lots of projects going in Klamath, lots of dollars there. So yeah, there's a lot happening in Klamath. So
more growth maybe than in that kind of category of commercial versus Jackson County or Josephine County, which might be more hotel, hospitality.
Gosh, I don't know if I could necessarily say what is going on in Jackson and Josephine counties. They're fairly broad. I mean, the credits that I have come across my desk they're all over the place. Yeah, so I don't know if I could label one county over the other in terms of its activity.
But that actually sounds more encouraging than a lot of the newscasts because there's a lot of negativity projections about the economy.
Sure.
And what I'm hearing from you is actually pretty hopeful.
Yeah, I mean, I will say that certainly things have slowed down a little bit with the increase in interest rates, but, business is still happening. One of my colleagues said it best when rates first started going up, and that is, business needs what it needs. So regardless of whether interest rates are 4% or 8%, a business needs a new piece of equipment, they're going to get that piece of equipment if it makes sense for them. So it has slowed down, but it's not like it's fallen off, And also with springtime, I'm seeing a pickup in activity, which is great.
Yeah.
I mean, last week, I think I got 6 or 7 phone calls about different projects, which is really exciting to see.
Well, that's a lot.
Yeah.
So how long have you been with People's Bank?
13 years.
13 years.
Yeah.
So you went through the fires, you went through COVID, you came in right after the crash.
Yeah.
But you have a family tradition that a lot of people don't know about with
Sure.
People's Bank. Let's talk about that.
Yeah. So my mother, Jerry Reno, was one of the original kind of founding members of People's Bank, along with Ken Troutman. And she has just recently retired a couple of years ago, but she ended up being the chief operating officer of the bank. So to say that People's Bank is in my blood is
an
accurate.
understatement.
Yeah. I mean, it's kind of funny because I remember going to, employee pizza parties when I was a kid. So kind of fun. Yeah.
That's awesome. So when your mom was running things, what was the initial, because People's Bank is a local bank.
Correct.
And
yeah.
I remember during COVID, they were so helpful with all the businesses, and there was a lot of outreach. And the big banks, no offense, they were intaking and not doing it well. But what was the concept of forming People's Bank right from the beginning?
Service is really kind of what it comes down to. And I think that stands out today as well. Each one of my loan officers or each one of the employees is extremely service oriented. We're very advisory oriented. You're not going to call in and have to press 1 to get a hold of anybody, as an example.
That's true. You guys answer the phone.
Yeah, we answer the
You
phone.
do.
Yeah. But People's Bank was founded to be a true community bank. We want to build relationships with our clients, with our customers. We want to help businesses succeed. And that's what was missing is having that personal touch. And so we are founded on having that personal touch, which is really nice. And then you kind of mentioned PPP, that was a crazy time during 2020. And one thing, we did it extremely well, and I'm very proud of the bank for that.
Yeah, you
Uh,
guys were amazing.
we did. I mean, we had people that were up 24 hours a day. We were processing applications because we knew it was a finite resource, and so we wanted to do
And
what
a
we
lot
could
of
for
people
our
didn't know
community.
that.
Yeah. Oh, it was incredible. And then another thing that I'm very proud of is the bank established a foundation and funded it with $1 million for the purpose of affordable housing.
Oh.
And even more so, what's pretty cool is that the employees actually contributed a little over $200,000 of their own money toward that foundation.
Wow.
So bank put in $1 million, employees put in a little over 200,000, and that's the community bank difference, right? We live in these communities, we want to support these communities, and so it was really nice to see the employees step up to do that.
That's incredible. That is absolutely incredible. Well, we think the world of People's Bank, and it was just an amazing thing to watch during this incredible crisis. And there was so much uncertainty, medically speaking.
Mm-hmm.
And then when this PPP came out, and then we had the fires.
Yeah. Oh my goodness.
So,
yeah.
Yeah, we'll have to talk about that. So getting back to you, Guy, because we want to do a little update from what's going on with the Federal Reserve, the ongoing saga.
Yeah, I think we just need to get him some clown makeup because literally they're still looking in the rearview mirror. They finally admitted literally today that they waited way too long to address the rates going up, and something I've been saying for years now.
You did. You called that.
Oh, well, anybody that checks out the front glass instead. There's a reason the rearview mirror is a lot smaller because you're not supposed to focus on that. But that said, he says we're going to cut rates this year. So that was his big speech this week. Took him a whole month to say that, and I don't really have words to be really honest. You know, they really need to do this, and they need to get it going faster. I'm sure there will be some dissension that actually has come out later in the week, from some of the smaller feds, but they're committed to doing it this year, but there's no commitment as to when. So everybody's still thinking probably second quarter, either the first part or the middle of the second quarter is when they're going to start doing it.
So what happens if they don't? Because so many people are banking their business plans and their life plans on having this dip in the rates. What if they don't?
It's going to put a huge strain on everybody. I mean, we're having first-time homebuyers coming in talking to us about a $2,500 payment, and they're
That's hard to do in Southern Oregon.
If they don't do something about it, then it costs more for People's Bank to finance the units that they're doing, and then it costs those people more rent, and the whole thing is inflationary. I mean, printing trillions of dollars is inflationary. There's a lot of things that they could do to kind of undo this right now. Sadly, anyway, I'm hoping that they just lower rates and things get a little bit better in the next couple of months.
So let's take the opposite then. Let's say the rates do go down this summer. What happens to you guys' businesses? What happens to the housing market and the commercial businesses?
Honestly, there'll be another feeding frenzy. So
our price is going to go up.
Our prices will go up.
So isn't that inflationary?
It is. It is, and that's why these big swings, they should just kind of start pumping the brakes now. I mean, or they should have pumped the brakes 2 years earlier to do it. And right now they need to start really showing some confidence to people that they're going to do it, because I mean, people's perception is 90% of everything. I mean, as far as this goes, the job numbers, they just need to be real about those, and it'll straighten itself out. It always does,
Well, folks, we're going to have to take another quick break. Do not go away. We're talking to Guy Giles, Mutual Mortgage, and Jason Reno, People's Bank. He's the commercial lending team lead. We're learning lots and lots about the economy and a lot of local news. So please stay tuned. We'll be right back. Well, hey, Southern Oregon, welcome back to the Real Estate Show. We've got a great one today. Jason Reno from People's Bank is here. He's with the commercial lending team lead, and Guy Giles from Mutual Mortgage for his monthly update. We want to say thank you to the ACE, thank Radio 1300 AM, new on the wavelength, and so happy that they are our new radio home. So, Jason, let's talk a little bit about equipment loans, because you mentioned that right in the beginning, And this is our last segment. We want to make sure people know how to get a loan for a new dump truck or what? What can you buy?
Yeah, they're great. It's funny you say dump truck because we finance trash trucks before, those that are picking up trash on the streets. So, yeah. So,
that probably pencils better.
Yeah. Equipment financing can be as broad as commercial real estate, but equipment financing is going to be anywhere between 5 and 10 years in term, depending on how long that equipment lasts, the useful life
You mean
of that
you have
asset.
to pay it back in 5 or 10 years?
Yep. Depending on how long that equipment will last. And then usually we're looking for 20 to 25% down, but that could be anything from trash trucks to packaging machines. We have manufacturers that we finance. They have entire lines. And so equipment can be very specific. And the more specific, it's kind of like those single-use purpose buildings, right? If you have a piece of equipment that's extremely specific, the bank always has to think about, well, shoot, if we had to take that back, what's the market for that? And so we may ask for a little bit more down, but generally speaking, we're going to be 20 to 25% down, and our repayment on that will be between 5 and 10 years, depending on the useful life of that asset, how long you expect you can actually use it for.
Well, and I would think that even if you're maybe thinking of adding some equipment to your existing business or something, to sit down with Jason and talk. And I mean, he'll help you figure out if that'll pencil out by that extra production you can do. Will that pay for itself in 4 or 5 years? You don't have to pay it off in 10 years if you don't want. But if it would really increase your productivity, wouldn't hurt to call him to just sit down and have a talk.
Yeah. Well, I appreciate you bringing that up, Guy, because that's another thing that my commercial loan officers do is we try to act as much as possible as an advisor. We'll talk about, well, what is your need? What are you needing? What are you wanting to do? What are you hoping to accomplish? And then we can sit down and really structure financing that helps that need. One thing that's really fun about commercial lending is that, our sandbox is a little bigger. We can customize products to fit a business's need. And so we really enjoy that part of the relationship.
And these guys at People's, that's the nice thing about being at a local bank. They're there to help you make a decision. If it's good, you don't have to have all that on your own. They can help you decide if that is even a good move or not. They want to loan money also. So they're not the bad guy that you got to walk in there with your hat in your hand begging for money. They'll help you make the decision if it's a good one for your company or not.
Yeah. And you know what? Sometimes this is contradictory to what a bank should say. But what I'll say is sometimes acting in that advisory capacity, the best thing for the customer is to say, you know what, you don't need this. Like, I'd love to lend you the money, but it doesn't make sense for you. And that is something that I think also sets People's Bank apart is that we have our clients' best interest at heart. That's really important to us. And then another thing, if I might just continue, is a lot of the partnerships that we have. And so what we'll really work on is we'll see how we can get to yes. In commercial lending, we identify what the risks are, and we try to figure out how to mitigate those risks. And we have several tools at our disposal. That includes government guarantees. So we have USDA guarantees. We have an SBA product, which I think a lot of people have heard about. But then we also have local partners that we can work with to get to yes. So Ready is one. We also have a company called Craft 3. So a good example of that is, maybe you have somebody that wants to buy a building owner occupied and they can scrap together 10% of down payment. Well, typically we ask for 20% down. And so what we've done successfully in the past is we've gone to a So Ready and we've said, hey, this is what we'd like to do. We're going to do 80% financing. We're going to have you do 10% financing, and then the client will come in with 10%. So we really try to figure out how to make it work. And those partnerships really set us apart. And then also we have tools like SBA, some pretty cool things there with something called the 504, which will allow you to actually have, for half of the loan or 40% of the loan, a 25-year fixed rate.
Oh, wow. That's
just kind of cool.
Great. Yeah.
And then we also have, for larger loans and for our more sophisticated clients, we have products that will allow us to actually fix the entire balance of the loan for 25 years. So quite a few tools at our disposal, quite a few partnerships to see if we can get to yes and to structure it in the best way for the client.
So if you're sitting around trying to save up 20%, these guys might already have the answer for you. And have already done all the homework. So you might as well just give them a call and see.
Well, and then your business can either get started sooner or it could grow sooner. And I really love that your local your localness, which is not really a word, but Southern Oregon is unique and it's kind of quirky.
Yeah.
And some of the bigger institutions, they don't really understand us.
Yeah. Yeah. No, that's what's really nice is that we are headquartered here. I mean, I sit at our headquarters, so our executive team, our entire board, all local. So that makes a big difference, especially when we advocate for the community and call ourselves a community bank. And then also what I'll say is another thing that kind of sets us apart is our local decision making. So maybe some of the regionals or the larger institutions, my commercial loan officers are the underwriters. So when you come in,
Really?
yeah,
Oh, that's awesome.
it's pretty cool. So when you come and talk to your commercial loan officer, you're talking to the person that's going to be doing the work. And we do have an approval process, but that approval process is local. I mean, for me to get to the highest level, I'm 2 flights of stairs away from, our highest approving authority. So that also allows us to be fairly agile. We got a loan closed in 2 days because
Really?
2 days. Now, it wasn't real estate secured. But we had a company that had a cash flow challenge, and they were coming up to some payroll, and we were able to get a $1.5 million line of credit approved in 2 days' time. And so that just speaks to that local decision making.
mind-blowing.
And anybody that's been around the valley forever, like me, feels like Ken Troutman is like a family member, even though I couldn't tell you even what the guy looked like. I mean, these guys have been around doing this for a long time.
Yeah.
And there is something to be said about being able to walk in and actually talk to somebody, because I've worked for a local bank and I've worked for a huge one. And it's just nice when you can talk to somebody that understands the different areas here, which somebody even from out of the area won't even know where's a good place or a bad place within the town.
Yeah.
Well, it's just amazing that when you go into People's Bank commercial department to talk to a commercial loan officer, that is the underwriter. That must be so comforting to your customers.
It is. And then it's also very nice for our loan officers because, they have that knowledge. When they go out and they visit a customer, they know what we can do and what we can't do. There's not going to be I have to send it up to Portland or I have to send it up to Seattle and see what the underwriter says. They know what we can do.
That also gives them a unique perspective if they're in touch with the business rhythm. They might be able to predict the growth spurts before they happen, and maybe even before the business owner sees it, or actually point out other business opportunities because they're so connected.
Yeah, to the community and to the business.
Individually.
Yeah. I mean, they definitely work as we partner up with our businesses absolutely toward their success. So if there's something that we know about or something that we can help them with, we will do that for their success.
Oh, that's wonderful. We're talking to Jason Reno, People's Bank. He's the commercial lending team lead. We've got Guy Giles here and his monthly visit from Mutual Mortgage. Jason, how about you throw out your phone number for those that want to get a hold of you, and maybe an email?
Yeah, so my desk line is 541-618-3325, and my email is jason.reno, RENO, @peoplesbank.bank. And that .bank throws people off, so that's correct. .bank.
Oh, that's good to know. It's not .com.
It's not .com. .bank. Yep.
That's fun.
Yep, and I work with very experienced lenders. My team is, and so we would stand at the ready to see how we can help your business or help you.
And you have a lot of branches.
You said you've got 3 counties, but you also have a lot of branches just in Jackson County.
We do. Actually, what's kind of fun is where other institutions, other financial institutions are exiting, we're actually growing our branch footprint. So as an example, we opened up a branch in Jacksonville. I think Umpqua had closed that. So yeah, we have Jacksonville, Medford, we have 2, Ashland, Grants Pass, Klamath Falls, and then we've actually also moved up north. So we have branches in Eugene, in Albany, Salem, and Lebanon.
Oh, good for you.
Yeah.
Good for you. Well, Guy, how do people get a hold of you?
Well, same phone number, 541-944-6987. And when you say good for him, it's actually good for all of us when these community banks grow, because we just don't want everybody getting gobbled up. I walked into one of the big banks and the lady walked over and tried to show me how to use an ATM. And I'm like, I'm in here because I want to talk to somebody. And it's the craziest thing. So having local people that you can talk to that want to talk to you is good.
Well, and you answer your phone as well. So what's your number?
I don't when it rings when we're on the air, but other than that, I do answer my phone. Would you ask what my phone number?
Yeah.
541-944-6987.
Well, folks, we got to wrap it up. That's another episode of The Real Estate Show. Thank you. And we'll be repeating this show tomorrow at 8 a.m. And have a great weekend.